Hey traders, Jeff coming to you here from Full Throttle Traders. I want to take a couple of minutes today and break down a specific trade that we did yesterday on Johnson & Johnson. There's a lot of good nuggets in this little training video I'm going to share with you here that we teach our members. So I want to take a second and show you that. So bear with me. All right, so we're going to talk a little about Johnson & Johnson in here. There's a few different reasons why this trade worked so well, which we talked about on our members channel on Discord at Full Throttle. The three main reasons were, number one, the sector on the drug manufacturers yesterday was strong. If you're not considering that when you're trading, you're missing a big part of ancillary money coming in from some of these hedge funds that will push the bids through some of the more kind of outlying areas that prices may not extend into those areas. Number one, trading clean. Number two, we'll talk about that. And then trading what we call with relative strength on that market pullback early on yesterday on the gap down. It was hard to find stocks that were relatively strong. So those are the three main components. Trading clean, I'm going to discuss that. The right sector at the right time in some of the biotechs were strong, and specifically drug manufacturers. And then finally into the relative strength. So here's a picture of Johnson & Johnson in our trade that we took here. Again, we used a very small risk. The process that I use is a small risk and add to win. Unlike a lot of newer traders, they add to the lose to better dollar cost average. I don't. This keeps me having an extended Sharpe ratio. This trade could have paid about $1,500 with ease here, but I'll show you why. We took 740 out. I'll kind of show you why we decided to take it off the table then. Number one, clean trading. What do I mean by clean trading? When I talk up to traders a lot, and as I identified on our video yesterday, I said clean trading to me is when you don't have a lot of shakeup in the tails. You don't see a lot of wish-wash, like the tails top to a lot of dojis. There's always going to be a few that's just trading, particularly in the morning. This is just on a stock trade. Now, you saw the cleanness of the trade coming in here. See these bars here? For the most part, they were tracking from top to bottom, leaving very few tails. The time we had tails was where it was rebuking the buy setup to the upside after a small retracement. Once it got through, it's back to clean, settle down bars, and then even here clean. Now, we entered this trade at 149.50. Here's how one of the ways that we entered it. When I start off in the morning, I typically find those stocks on my gap list, and I'm drawing fib lines. Right, this trade came in after 10 o'clock. It's just a 2-minute viewpoint of that. In a moment, I'll show you how I used a unique one-of-a-kind management system to actually help us potentially get that profit up here. We took it a bit earlier here, so it came in a little bit kind of back on the potential, but I want to show you that management worked. Anyway, back down here, we took around at 50%. We had boxed in the entry. What does that mean? Well, as we talk about it in a room with our traders, boxing in an entry means that I'm at a point where I'm going to take it on a further pullback, unless it gets too far, or I'm going to box it in higher so I don't miss the trade. When you're trading pullbacks, very often you can miss those runs because you want to be so pristine on that entry. You can't do it. So I look at the Fibonacci channels, and as long as we're staying somewhere between 50 and 61%, I'm okay with that. Now, I had my order down here at 61, probably 62%. 61.8 from top to bottom, the open here was at 149.51. I split the difference, and I came in at one, and actually it went there to 161, 149.38. I got in at 150, right? We only had a 12-cent drawdown, so it was the place to be in. If you're using Fibonacci's on these, you should nail that entry. It'll help you nail it if you have the right stock. If you don't have the right stock, it really doesn't matter because it's going to come down or chop around and eventually take you out. We got out, our stop was right here, which was just a little bit below the 75%. As I tell our traders at Full Throttle that if you're getting out below 75%, very often that is the place where you'll have stop outs. You don't want to. Now, sometimes they will have a tail that'll come down through 75%, but come back up. Typically, 61.8 is where we want to go, but 75%, I'll go up to that level as long as it's trading clean, as long as it's in a good sector, and as long as I have relative weakness, which we had all of this. So once again, got in here at 149.50 on the pullback. We alerted the room prior to actually triggering. I actually loaded a trigger right in here at 149, well, actually at 150. So I told the room, I said, we're going to get in this trade. And here's the key. We're not going to bring our stop up if we get in the boxed in trade to the upper side. right? What we do is keep the stop the same, right? You shouldn't adjust your stop. We're just going to basically reduce our share size so our risk remains the same. So if you were in 250 shares, for example, in this particular trade, you might be at 187 if you get in 50 shares later. You're risking it if you're trying to keep the same shares and get later, especially on these. These are specifically tight stops. We don't want to give them a lot of room. We just want to find the exact price, and then we want to be able to capitalize on an extended move. So when you're seeing this, you're looking at basically 3-1. Again, on a normal situation, this would have been a 6-1 trade, and I'll show you why. So once we entered in here, certainly the market went up in here. We came back down to the VWAP, which is the purple line in here. We held pretty true. And then right in here, I start a management process. I do not manage on the 2-minute chart. I manage on the 5-minute chart. So I'm going to change gears on you just a little bit here. And again, I told the traders in our room that I said, this is an area we should be taking some off. Now, the market was extremely wild yesterday, so I elected to take it all off at this area coming into the high of the day, that retest. And the reason is because very often when you have a relatively strong stock in a market that hasn't begun to turn yet on such a, well, I saw the Qs, the SPY down, what the NASDAQ was down like over 3% at the end of the day. This is usually a good place to take profits. So I use a management system that's mechanical, but when I see a chart that tells me otherwise, I always follow the chart. And I would rather make money and get out the top instead of making more versus by holding on versus having it come up and having that unrealized gain become a flat or a break even. One of the things I do in my trail as I switched over to a 5-minute chart, I track off the 9 EMA. Now this is like gold. It's not touching the 9 EMA. It's not about touching it. It's not about the next bar touching it. I have a very unique system is that I'm looking for multiple bars that have to be higher than the previous bar every time it touches. I usually give it a dime below. If you take a look at this example, this was down at 150.98 is the low. I needed this bar here to stay above this bar by 2 bars above this bar. It came down 1 penny below. I couldn't count that bar, and I gave it about a dime below anyway. This bar at 150.97, as long as I had 2 higher bars above, there it is. That allowed me to move stop to here. This touched here, 2 higher bars above, new stop. Doesn't touch 9 EMA, doesn't get the warrant. Next touch here, 2 bars above, stop goes here and a dime. Straight up, touched here, 2 bars above, stop goes to here. Same here, 2 bars above. So anyway, if you would have managed this out, you would end up getting out somewhere in this area. Our target actually was 153.50. That was 4R move. On a 4R move, if you didn't take pieces along the way, you would have made $2,000. But we're taking pieces along the way. I'll take a second since I'm on this slide and show you. Again, I won't belabor this, but this is the trade, right? And then as I go up, I know when to go to break even. I know when to add my position, adding on the way up, right? I know when to start taking quarters off. And again, this is mechanical. I get in, I type the numbers in. This is just data that I've used over the years that works more times than they don't, right? And so this is my mechanical baseline. But as I mentioned before, when I see the actual stock getting to a place like this, I would lighten up a bit more. So taking a quarter, and so forth, and moving the stop up, looking for a 4R ultimate target, that would have resulted in a $1,500 win. It comes out to about 2.93 if it's done correctly. This ended up being a little bit less because we took the double top because of the way the market was just kind of off. We normally don't. We normally follow it, and it would have proved higher dividends there. Again, that's a unique kind of one-of-a-kind management system that gets you, and again, this happens a lot, not just a one-off. This happens a lot. Trailing that 5-minute chart the way that I talked about gives it room, but it doesn't ever break that 5. When it breaks that 5, you can see down here, if we've got toward the latter part of the day, well, this is today actually in here, so it started to kind of come down. But as it started to come down here, there was more red that showed up once it got below that area. Once it 1, 2, 3, that still will not have moved or stopped because each leg was lower. But you can see once it starts getting below the 5 EMA, the management system is gone. A lot of traders on the intraday time frame utilize the 9 EMA. That's why it's so effective, because we can stay getting in for different reasons, but we're managing with the people, but we have to give it some room. You can't be so precise. as to if it touches that one, the stop goes here. It doesn't work that way. I wish it did. It's a lot easier, but this is just a way that I can teach you how to use that system to where you take the emotion out of trading. It's strictly 100% mechanical until you run into a situation where you have something where you need to take profit. So I went back to the daily chart on this. Well, this is a 65-minute chart. You can see yesterday we were gapping up and above. That's why it was on my gap list. We were clean. There was nothing back. There was no resistance we were coming into. But look at the daily chart, much of the same. Now, it actually went up right and touched near the 200 moving average, but you can see this is why it was on my gap list. Transitioning here above the 50 MA, the yellow gold line. Again, by the time I got up in here, we were just getting in the trade. There was nothing to the left. We had supply back in here, but that supply was going back a month. The more you go back, the more that supply is diminished, particularly after a continued move down. What that does is take some of the margin calls off. They begin selling and just begin lightening up because the trade went from 150 there down to around 140 down here. So usually that $10 move, usually around 8% or so, that the supply starts coming off the table in here, so it had less. So it went right through here, all the way up to where this area right here is here. As a matter of fact, 154.80 was the top. I put that top of the bar. It's just above the 200, but we were focusing on, as long as our target at 4R was beneath that area, that was our focus. And it worked out perfectly in here, other than the fact we just took it a little bit early because of the day, but normally we'll follow that plan. So I hope this was helpful. You enjoyed that. Come into Full Throttle Traders. We do this every single day live prior to them actually happening. And you can see the management, you can see the style, you can see the scanning, see the gap list. And of course, we have a lot more. We trade options and stocks and spreads and things like that. This is just the first hour we spend day trading stocks and then move heavily into options for that point. So this is probably 20% of what we do. The 80% is a whole other thing that we trade all day with our members here. But this is for you traders that trade stocks or even trading options in this format. This is a great tool to use. Come check us out. Full Throttle Traders. See you in the room.